Chip makers including Micron, Intel, and AMD have collectively gained $2 trillion in market value. This remarkable surge reflects the intense investor appetite for companies positioned at the forefront of artificial intelligence infrastructure development. Market analysts attribute much of this growth to the recognition that semiconductor manufacturers are essential to every layer of AI deployment, from data centers to edge computing devices. The broader semiconductor sector has experienced a fundamental reassessment from institutional investors and retail traders alike. Beyond the headline valuations, this shift represents a critical rebalancing of how the market views the AI supply chain and its key participants. Industry experts note that while companies like NVIDIA have dominated AI investment discussions, the supporting cast of chip makers is finally receiving the valuation recognition many believe was overdue. Portfolio managers worldwide are actively widening their artificial intelligence allocations to include chip makers beyond the traditional leaders. This strategic shift reflects a maturing understanding that AI infrastructure requires diverse semiconductor expertise across memory, processing, and specialized chip categories. Investment committees are now explicitly asking their analysts to evaluate smaller chip makers and niche semiconductor players that serve the rapidly expanding AI ecosystem. Micron technology has emerged as a particular beneficiary of this reallocation trend. The company's position as a leading memory supplier has become increasingly valuable as data centers expand their storage capacity to handle massive AI model training and inference workloads. Institutional investors have upgraded their outlooks on Micron, citing the structural demand drivers that will persist throughout the AI build-out cycle. Intel's resurgence in market sentiment marks a significant turning point for the legacy chipmaker. After years of competitive pressure and manufacturing challenges, Intel is now being reconsidered as a crucial player in the AI infrastructure race. Analysts point to the company's manufacturing capacity expansion and renewed focus on specialized AI processors as catalysts that justify higher valuation multiples. AMD's valuation expansion reflects confidence in its competitive positioning within high-performance computing markets. The company's EPYC processors have gained meaningful share in data center deployments, particularly among cloud providers building proprietary AI infrastructure. Market participants are increasingly confident that AMD will maintain and expand its market share as AI workloads continue proliferating across enterprise environments. The $2 trillion valuation gain translates into substantial wealth creation for shareholders who positioned themselves early in the semiconductor recovery narrative. This wealth creation is already triggering secondary effects throughout the financial system as investors rebalance portfolios and recalibrate their technology sector allocations. Financial advisors report increased client inquiries about semiconductor exposure and the appropriate sizing of AI-related positions. Fundamental portfolio theory is being reshaped as investors recognize that artificial intelligence investments require exposure to a broader range of companies than previously assumed. The traditional approach of concentrating AI exposure in a handful of mega-cap technology stocks is giving way to more sophisticated multi-layered strategies. Portfolio construction is now explicitly incorporating semiconductor companies at various tiers of the value chain. Investor implications extend beyond simple valuation multiples and into questions about long-term competitive positioning. Chip makers with diverse customer bases and strong manufacturing capabilities are attracting capital that recognizes the multi-year AI infrastructure build-out cycle. Analysts are constructing longer-term price targets that assume sustained elevated demand for semiconductors across multiple application categories and geographic markets. The reshaping of portfolio allocations signals growing confidence among professional investors in the durability of AI-driven semiconductor demand. Rather than viewing this as a cyclical boom, many market participants now frame it as a structural shift in computing architecture. This perspective justifies the substantial valuations and continued capital allocation towards semiconductor companies at various points in the market cap spectrum.